Hello, everybody, and thank you for joining us for today's episode of Trade the Chain. It is March 4th, 2021. I'm joined by the best air in crypto and also a fanatic soccer watcher, Ryan Gorman, alongside CJ from marketrebellion.com. Monty has a day off, not really sure why. But moving into what's happening today, I will say that as we just take a look at the broader crypto markets, it is a little bit of a sea of red. And we're going to get into that as well as traditional markets and what this possibly could mean for you. We actually did have a really good episode mapped out for you today. It involved some NFT stuff, some sport tokens, a few tickers that people wanted covered. But that's not going to happen. And we apologize for that. But the market dictates how our attitudes feel. So without further ado, Ryan, if you could tell everybody not to listen to us, please.
Before I tell everyone not to listen to us, market's dictating what we do. I'm actually completely out. Risk off to cash. And the only thing I'm holding is Doge because I forced myself into this situation by launching darts into my closet door.
Hold on. Before you get to the legal.
There you are.
I should have brought the legal before you said that.
What I do is not what other people should do.
Just so you know, folks, Ryan, you have now started. There's going to be comments up the butt. Do you remember the last time you sold?
I'm fine with that.
Okay. All right.
I'm going to sleep well tonight. The profits I locked in, for me, I'm happy. But remember, this is not investment advice. This is all just educational and entertainment purposes only, all of this. Do not listen to us. Do not take advice from us. We are not fiduciaries or investment advisors. We are entertainers. And I might not know what I'm doing at all, and I might get blown out of the water and regret this, but I will sleep well tonight.
Now, and just a side note on the disclaimer, right? Just because Ryan sold everything in crypto he owns except for the fact of Doge, I don't want to hear about anybody selling their whole portfolio off and saying it's because Ryan did it. All right. That's basically what he means.
Yeah. You're listening to a haircut if you sell off like I did. That's what's happening here. Don't listen to me. But for those of you still trading, this episode is brought to you by Trade the Chain, a global community of traders of all ages, all abilities. Alex, you're killing me.
Sorry, guys.
All right, I'll do that again. This episode is brought to you by Trade the Chain, a global community of traders of all ages, all abilities, all knowledge levels, and all using AI-driven sentiment indicators and actionable alerts to help them beat the market and trade like a crypto insider. To check us out for a 14-day trial, check out tradethechain.com.
Thanks, guys. Very professional as always.
I'm pretty sure CJ's the only grown-up in the room right now.
If you want to know why I sold off, look at this. It's a sea of red, right? I mean, no, I'll sleep well tonight.
Nice 1 hour charts. I dig it. I like it. And the Discord community.
Hey.
Very nice.
Gonna light that up later. I'm sure there'll be a blaze talking about my sell-off.
Oh yeah, you're quite popular.
Making friends everywhere I go.
At marketrebellion.com/crypto. This is Monty and myself and Market Rebellion and our community. And with us, you get exclusive access to trade ideas, our macro portfolio allocations, a pro charting platform, a trading education curriculum, and an elite community of traders all throughout the world, and much more. If you're serious about trading crypto, this is the service that gives you everything you need all in one place. You can start your first month trial for just $1 at marketrebellion.com/crypto. But yeah, going over to the stock market, we really have to discuss the crypto market from a couple different perspectives here, because the primary driver of what's causing all of these assets to go down has to do with the treasury market and yields. And so this sentence pretty much encapsulates why we're going down in the stock market. And I'm interested to hear you, Ryan, and Alex elaborate on this as well. But essentially, the rapid rise in treasury yields has deterred investors from growth stocks, which are also considered risk-on assets. Things like Tesla down over 6% today. I think you can lump Bitcoin into that category as well because it's highly volatile on the upside. and it's just been acting like one of these growth assets. So with rates tied closely to borrowing costs, essentially that makes companies have a lesser ability to borrow and essentially grow. So yeah, the market is not going to like that in the interim. And looking at every single chart, even metals, even silver and gold are both down, and we are down across the board. And unfortunately, Bitcoin in the cryptocurrency market, we look here, that is no exception. We have Ethereum down, VGX trying to test those support levels. But it's not all gloom and doom, because I do think this will pass inevitably. And I do think we will get back to bullish momentum in Bitcoin. We're just going to need to see a nice reversal first in Bitcoin. And I'll get to that. But the last thing I want to show, courtesy of Mazzari Research right here, is just a little performance between Bitcoin, the white line here, and the S&P 500. Very flat, very much less volatile than Bitcoin, but you can still see that there is a bit of correlation between some of these bumps and definite drops. We've definitely seen a very close relationship with the S&P and stock market when it comes to that regard. Moving on to Bitcoin, I have the 1 day highlighted here. And yesterday I was talking about going into a long trade if we closed above 50K. And that would be essentially, like, the level that I'm looking at is this white middle Keltner channel. And ideally you want to see a strong close above resistance. But this was not a great, perfectly strong close. We went up, but the trend did not have enough momentum to close above that level. It kind of fell back towards the end of the day and just barely closed above it. So it's not perfect. It's not ideal, but I am still bullish in the sense that I do believe this macro trend is probably hit a bottom here at roughly 43K to 45K. Do I think we could go back and test those levels? Sure, I do, especially with the way that the stock market and the way that the yields have been affecting and selling off. Now,
CJ, remember we were talking earlier about what would happen to Microstrategy stock if Bitcoin were to correct as violently as we were talking yesterday? They're down 14% today on a relatively mild correction. Bitcoin goes up to 200K and drops down to 80K. Taylor might have some explaining to do. The correlation between the S&P 500, between equities, MicroStrategy is not in the S&P 500. I think they're in the S&P 600, right? And the correlation between equities and Bitcoin has hit a 5-month high. And when you have companies like PayPal and Tesla in the S&P 500, it makes sense that you'd see Bitcoin sell off as these companies go down on low consumer confidence. I think Alex is better at explaining the correlation between bonds and equities than I am. I understand it, and I can trade it, but he's a little more eloquent in that regard than I am. So I'll let him explain that.
I don't even want to talk right now. What's that, CJ?
Is that a bottom signal? Think about it. If you're feeling max pain and max fear, that's what everybody else in the market is feeling. So does that mean we're close to a bottom?
I'm not feeling pain. I locked in my profits.
Oh my gosh.
I'm hanging out.
Listen, a couple of things. We've been kind of numb on the traditional on the equity markets for quite some time. We've been numb with this just super rise, right? That's really been going since about 2012 and 2011. And so we always think everything's just going to go up. But eventually it has to stagnate at some point. And so now we have a big regime change in the White House. There's a different philosophy on monetary policies that are going on. So one of the things that we're seeing right now is that switch to what CJ was pointing out earlier, with that 10-year interest rate climbing, and you need to pay attention to that. It's a direct indicator of consumer confidence. And what it does is it does make people reshuffle where their risk on is and the risk off is. I mean, you saw there's people like Ryan who just sell everything. There's believers who will just ride it through, but the majority reshuffle their assets so that they can hedge what their portfolio looks like. One of the things, looking at my traditional portfolio today, which was really interesting, was the fact that everything was red on the equities position. I hold, I would like to say, a pretty good array of diversification between hospitality, transportation, and energy and things of that nature. But even and I do own gold. There's a decent gold hedge in my portfolio, was down below my cost basis from a year ago. And that was surprising. I didn't think that I was going to see that. But that also makes me tend to believe, looking at the metals, as we did earlier, that there isn't, maybe we're having a short liquidity crisis, or it's just a reaction to interest rates. But in the long run, I don't believe that we're going to suddenly slump into a bullish market going into finishing out Q1, going into Q2. If that were the case, I would think that we'd be seeing some other indicators going on. I think right now we're just getting a settling of sorts with the new 100-day regime in the White House.
What about CAPE ratios when you're looking at equities? CAPE ratios have only been this high a handful of times, and that was either just before a crash or on the way down from a crash.
So now Ryan is pulling up very nuanced little indicators in the market. Now explain to people.
Huh? Those are what?
Yeah. Now explain, if you're gonna start pulling up indicators no one heard about, you got to explain them.
So a CAPE ratio was created by Robert Shiller, the Yale professor and famed economist, and it just uses real earnings per share over a 10-year period to smooth out fluctuations in corporate profits that occur over periods of a business cycle, right? So it's kind of it's an adjusted price to earnings ratio, cyclically adjusted, hence the CAPE acronym. And I'm looking for a chart right now to pull up to show how CAPE ratios look. Give me a second. I should have had this ready. I just kind of pulled it out off the top of my head. Here we go. So when you're looking at CAPE ratios, right, and this goes all the way back over 100 years. Look where we are, right? We're here. We're higher than we were at Black Tuesday. The last time we were here, we went a little bit higher and there was a dot-com crash. Otherwise, we were here on right before the COVID crash. And, the only reason it didn't go higher before a crash likely is because of the COVID crisis. But back then, people were sending alarms about rising interest rates, fears of inflation, the economy overheating, all the same conversations we're having now, we were having back in March before the pandemic. So I don't know how equities don't have a significant correction.
I agree with you. I think, and I think you make a good point in the fact that COVID put a pause almost to what everybody was thinking about. Because if you go back to this quarter last year, we were talking about, well, things can't keep going up. There's going to be a correction. If you take a look at the Dow, the multiples of valuation were like, 68 to 1. It was ridiculous over intrinsic value and things like that nature. But maybe you're right. Maybe
if you want to have a healthy CAPE ratio, which is a great indicator of what valuations of stocks are, if they're healthy, overbought, or oversold, you should be around like 18, 19. We're at 34. We're out of control right now. And
sorry to interrupt. Just to play some devil's advocate.
Yeah, go ahead.
Against you bears.
I'm market neutral.
I'm not a bear. Yeah, I'm not a bear by nature. Charts don't lie, and this doesn't feel like a healthy market cycle to me.
No, I agree. I'm just teasing with you. But one thing that Tom Lee said this morning that was pretty interesting, and of course he's been a macro bull all the way up, but has been very right ever since the beginning of the correction in March. And what he claimed was that due to these kind of rising yields, yeah, we may see a correction in the short term. But for the rest of 2021 and 2022, he's very bullish on the expansion period or the expansion phase post-COVID, because he kind of compared our current points when it comes to government spending and stimulus a little bit similar to a post-war expansion period that we had a little bit earlier on in the 20th century. Tom Lee's been very right with his bullish calls over the past couple of years. So I just thought that was pretty interesting. I encourage anybody who hasn't seen that to definitely check it out.
Okay.
We've had him on our roundtables. I really respect the guy. So.
No, I'm willing to accept that. But again, let's just look at this, right? Let's say he's right and we have that expansion. We go up to here, we're only going to crash harder.
I love the name of that chart.
The correction will happen. It always does. If it doesn't, then it would be unprecedented in terms of market cycles. There will be a correction. And the PE ratio, the CAPE ratio hasn't been wrong in the past. This will be the first time since back tested all the way to the 1870s that would be wrong.
It's different, Ryan.
Okay.
I'm just kidding.
I'm gonna.
I know. It's a very simple way of looking at the stock market. If you know the number should be in the 18 to 19 range, and we're at 34, and the only time that's ever happened was before a crash. And the market's being held up by artificial fundamentals anyway. It's just through buybacks and and QE. There's no fundamentals that these companies have that are holding up their valuations. There's no economic activity. There's no buying and selling. There's no manufacturing except vaccines. Nothing's happening.
You forced me to take it to a fun area right now. Okay, so folks, I want to introduce you to something that is making me money right now. Before everybody slits their wrist on this show. So Shadow Networks, ticker DAOs, is actually did a couple of days ago an initial DEX offering on Uniswap. And to give you a background on Shadow, so basically decentralized synthetic asset issuance. So, when it comes to different instruments, they can create their own synthetically and put them out to market as different protocols. And this has just done fantastic. I'm very happy making money in this sea of blood that everybody's talking about. But yeah, so guys, this is basically where it's like an initial exchange offering just on a DEX. And so it started zero and liquidity entered the space organically. And now it's a free trading market 3-4 days later. So very pleased to see my Shadow Networks ticker DAOs doing well.
Well, I mean, there's always one. There's always one boat that makes it through the storm,
Oh boy, we do have a triple red on the Trade the Change chart, which is always interesting. It doesn't come around very often. But I will say that in some other good news, you do have some players like Chili's, which is up 57.9% in the last 24 hours. And Chili's is one of those, it's basically a sports team protocol. And you can see
Yeah, like teams like AC Milan.
Ryan, I'm surprised you aren't a huge fan of Chili's. Maybe you haven't had time to look at them yet,
because I don't like any of the teams that are issuing tokens. I want to give them money to buy players to compete against the teams I like.
Jeez, all right. Here's what their chart looks like. They've done really well. There was it was a big fanfare over at Binance when they launched. Let me cruise through the Market Rebel site. I did want to touch on HBAR today, but obviously we spoke a lot about the market and it's now being affected by the market. So
that 9, isn't that a nice 9?
See that
arrow too?
That's I mean, that was a textbook reversal right there, CJ. just watch the candles go up and down. But in all seriousness, folks, the market is doing what the market does, and I think that's why they call it now paper hands and diamond hands, if I'm not mistaken, with the young folks. And it sees who shakes out and who sticks through it, and that's basically it. So
I didn't shake out. I ran away screaming.
you did run away. You did.
I'm okay with that.
I think I heard you screaming while you were running away too. CJ, give us some parting wisdom on the last half of this episode, please.
When I look into both of your eyes, I see pits of despair and fear. Alex,
I'm hanging out.
if this goes lower, is there a bottom? What is the worst case scenario here, or where could we recover and go to?
Maybe I go into equities. That's where I'll head.
No, I'm talking
always,
about equities.
Yeah.
I mean, if we bottom out, we're going to bottom out. My call on equities market bottoming out is about 20% retraction from where we are now. A year ago, before COVID, I would have said it was actually more like a 30 to 40% retraction. But I think we're 20% retraction. But I also am not dismayed by our call for the bull market cycle in crypto. Now, equities market has a lot to do with how the crypto markets react, but I believe we're just taking a step down to go 2 steps up, and that's how I look at it.
Oh, absolutely. And the performance I've had this year so far is, even if I get blown out of this position and I still have to buy it back in at a bit higher of a price, I'm okay with that, because I've achieved my interim objectives investing in crypto, right? You have to, like Rob always says, have a plan. Rob at Digital Asset News, have a plan, stick to it. I had an exit number and I stuck to it.
I wonder how Rob's doing today.
I'm
we'll
sure
have to
he's
check in with him.
But I had my exit number and I wasn't willing to budge on it. And if I was wrong, then I was wrong, but at least I still have the profits, the minimum amount of profit that I wanted. So I'm okay.
Absolutely.
Mm-hmm.
Absolutely.
From the perspective of a macro stock to flow ratio, I think it's going to be very difficult for Bitcoin to remain following that model all the way up to 6 figures if the equity market cannot at least remain neutral. If we go into that 20% correction, like Alex says, I think it's going to be very difficult, or at least is going to put a massive dent in Bitcoin's ascent when it comes to like the actual stock to flow model. Because like if you look at the market participants, there's so much overlap between the US equity market and the cryptocurrency market and the way that those assets are both viewed. And so, I don't think we're going to go through a full-blown crash like you said, Alex. I think we're feeling a lot of pain right now, and I think that's pretty good indication that people are scared and we might keep going.
Sure. I don't think we're going to a full-blown crash. I think we're at a speed bump, a normal speed bump in the life cycle of the bull run, whether it's the equity markets or the crypto markets. But what you just said is something that we've been talking about a lot over the last 3 months, let's say, and that is the correlation between some of the equity participants and crypto participants and those overlaps. Crap's going to get real when quarterly rebalancing happens. I just that's going to be like a double levered ETF to the bottom side, for Bitcoin.
Yeah. Also, another thing I was going to mention earlier when you were talking about kind of the new regime change was that we have tax season coming up, and some individuals may be taking a little bit of profit and selling off because of that as well.
And for those of you that don't know what quarterly rebalancing is at the end of each quarter, hedge funds and institutions rejigger their portfolios to better reflect their investment objectives over the next 90 days. And if we're trading sideways or down, I think most of us agree that we're probably going to go a little bit further down when these institutions reaccommodate or reallocate their assets.
Yeah, and part of what Ryan's saying is, it's not only to de-risk portfolios or balance sheets, It's also to lower overweight positions. So, all these people or companies or hedge funds that went heavyweight into Bitcoin, they need to reduce that exposure just out of pure investment thesis or economic sense.
Absolutely. I can't wait to see MicroStrategy's earnings call if Bitcoin doesn't recover before the end of the quarter. I'm just curious how Michael Saylor explains the risk he's put his treasury funds into. It's not a casino, it's a treasury,
Ryan, should we get Michael Saylor on here?
I've said this from day one. If you are a MicroStrategy shareholder and you don't like it, you don't like being a Bitcoin ETF, then get out.
No, that's fine. I would never hold MicroStrategy stock.
There's going to be a time when that comes, and we're going to be looking to buy puts. And if you want to put your money where your mouth is, all the opportunity is going to be for the better. So we'll see how it ends up. But I'm with you.
When Bitcoin hits 200K, I'm going to buy an entire bushel of puts on MicroStrategy as it approaches 200K.
You heard it first, folks. All right, we're gonna end it right here. Guys, thank you everybody for joining us. We will see you again tomorrow. Until then, actually, before I say hang on to your handlebars, we actually do have some good news. So we are going to drop the Swissborg episode with CEO Cyrus Faisal tomorrow, late morning Eastern time. So that's going to be really exciting. A lot of good things to glean out of that. As well, if you are a Trade the Chain member, you're going to be happy in the near future. So I spent a good solid hour on the phone with Loopring, that layer 2 Ethereum swap, and we got some plans for Trade the Chain members. And then lastly, if you didn't watch yesterday's episode or day before's episode about CJ and Monty's new show that they're doing with John Nigerian every morning, Monday through Friday. We'll see how long that schedule lasts. We all know Monty likes to sleep in. But if you haven't caught that show, that's a really exciting show. And if I'm not mistaken, CJ, you guys are actually like doing that as a live stream. So you're like going on, clicking the button, and boom, there it is, right?
Yeah, we're doing it on OBS. So a lot of fun stuff to learn there. But it's a privilege and an honor to be able to be on with John every morning. That's 10 a.m. Eastern time for the folks who want to watch live each weekday.
It's on Twitter.
You can find it on the Market Rebellion Twitter account as well as Market Rebellion YouTube page. It's a playlist under those. So yeah, we appreciate, we've gotten quite a large viewership considering we've just been doing it for the first week. But we appreciate that, guys, and we definitely check that out.
Check it out. John is a good friend of ours, and he has been in the trading game for 3.5+ decades. He is an OG from the floor in Chicago. So definitely catch Monty and CJ bantering it up with him. Until then, hang on to your handlebars. Happy trading. Let's see what happens the rest of the day in the market, and we'll get back to you tomorrow. Thanks, folks.
Bye.